Hey everyone, it's Mitch Goldberg. We are live. Thank you so much for joining me. It always means a lot to me when you take the time to join me. It really does. I put on this show to teach about personal finance, investing. It makes me feel it makes me feel really good. Like, I'm sharing knowledge. I'm sharing what I've learned in my 30-year career and going strong. And I happen to love my career, and the social media and the video. It actually reinvigorates me. I love doing this stuff, and I just want to add massive value to you. It's hard for me to always know exactly what you want to talk about. I mean, it's easy for me to get into the big news stories of the day in the financial markets and the economy, because that's my main thing. That's what I study. But I also know a great deal about personal finance. Hey, good afternoon, Bill, and thank you for joining me. So I have a lot to say about this stuff, and I would love for you to ask me questions, pick my brain a little, give me the topics that you want me to talk about. And it's all fair. We could talk about personal finance, investing, economy, statistics, and business. Okay. So if we haven't met yet, I'm Mitch Goldberg. As you could see, the name right over here, right there says on the screen. And I'm a financial advisor. I entered the securities industry in 1990, and I've been working with regular, retail clients the whole time. And I've run the gamut from, super high net worth to, regular people. So I've accumulated a lot. Just think about all the clients and the thousands of experiences, the comments. Hey, Michael Mosscrop, thank you so much for joining me. Hey, the man, the myth, the legend. I'm going to put that on the screen a little bit. That's awesome. Thank you. So there's so much going on. And over the years, you think about the thousands of situations that I've seen clients in that I've had to help them through. It's amazing how much I've learned in the last 30 years. That's what experience is, right? That's experience. And I want to put it to use here. I want to throw out all my experience at you. I just want to puke it out and just give it to you, That's what I want to do. But I have to do it orderly and slow down. Sometimes I have a tendency to speed up. I get excited and I start talking really fast. And I want to give you all this information, value, talking about debt, securities, investment. Calm it down, slow the brain a little bit, and we're going to get into this. Okay, so we've got a couple of things to talk about today. First, this is the day that everything hits home as far as economic statistics. We had the horrible employment figures. About 16, 17 million people have lost their jobs in the last couple of weeks. This is what happens when you shut down an economy. If you shut down the economy, you really don't need the jobs, right? What do you need jobs for? No economy except for government, municipal jobs, and healthcare. Our heroes, the healthcare workers. So that is one area I'd like to get into. Let me just adjust my light over here. Okay, so that's one area that we're going to get into. The other thing is stocks under 5. I want to talk to you about low price stocks because I think there's a lesson to be had here because of J.C. Penney. And I also want to talk to you about some strategy, and we're going to get into it. So let's just roll the introduction real quick. And then I'm going to give my shout outs to everybody who's watching on Facebook. I see you there, Matt. Thank you so much. Michael, love you, brother. All right. So let's roll the intro, and then we're going to get into it. Here we go. Welcome to be the boss of your money. It's a show about investing, personal finance, the economy, business, sometimes politics. We put it all together to make you your best version of your financial self. That's what this is about. The best thing is when you ask me questions in the comments, and of course your words of encouragement. Shout outs are always accepted and appreciated over here. Today was a gut check day. Okay, so the Dow was off 400 some odd points. Normally that would be a tough day, but over the last, month and a half or so, that's like a tame day today. And it was a gut check because we know the economy shut down, but as bad as things were expected to be, economic stats today were even worse than expected. So the economy is shut down and it's really going to hell in a handbasket. Retail sales were down 8.7%. Consumer confidence has plunged. Job losses are mounting. What else? Oh, you notice the picture behind me. Housing market is just getting absolutely obliterated. Home builders' confidence has dropped again. I was just speaking to a friend of mine who's a realtor at Douglas Elliman. His name is Michael Wright, and he's just telling me like can't show anything, can't do anything. I mean, this is stuff that we know, but I have a pretty big network, and I talk to people. That's what I do. I talk to people, and to hear people who just can't work, or they're not even allowed to make a living. There's really nothing they could do. It's really heartbreaking, and hopefully we get the economy up and running. Today's news also, Governor Cuomo of New York talking about opening the economy in some phases. I don't know how he's going to do it. I mean, people are afraid. Maybe he'll say that, well, if you're young and healthy, you can handle getting coronavirus. And if you don't live with anybody who's older than you, over 50, or if you don't have a compromised immune system, go ahead and catch it. That's what they're doing in Sweden, by the way. They're just saying, you know what, everybody live your life. We want enough people to catch it that we build herd immunity. Those are the some of the things that are going on. So what's the news today was just really how bad things are in the economy. And I mean, yesterday we're talking about the Dow up over 500. Maybe we probably hit the low already. Today it's like, wow, we knew things would be really bad, but they got bad even faster, really bad, even faster than expected. Now, some people are saying we're just getting it out of the way quickly. And then we have bank earnings. And this is, to me, the most, if you want an indicator of whether or not the economy can turn around, is coming back when we get this social distancing past us, because nothing's happening until that's past us. But if you want the one true indicator, you have to follow bank stocks. And there's an exchange traded fund, the Spiders Financial Services Sector ETF. The symbol is XLF. Tracks the U.S. financial services sector. You really need to see that start going up. You need to see bank stocks like JP Morgan, Bank of America, Citigroup, and Wells Fargo. You need to see those stocks start to recover. Though that's your canary in the coal mine. Commodities would be nice, materials, energy, but those are more a factor of just a massive amount of capacity. It doesn't necessarily mean if those don't go up, it doesn't necessarily mean that there's more demand. It just means that there's endless supply. But when banks start to move, there's really nothing you can do to dispute an improved banking sector, and you'll see it in the stocks when they start to go up, and they should go up in anticipation as a discounting model for an improved economy. Okay, so those are some of the things I'm looking at. Let's do a quick share screen. I'm really excited. If you haven't noticed, I'm bouncing off the walls today. I have a very special event tonight, and I don't know how it happened. It just it just started. That I went to SUNY Albany, and I was in a fraternity called Sigma Nu, and I loved it. I absolutely loved the whole college experience. I met my wife there. My best friends are my friends from Albany to this day, and I graduated college in 1989. And one of our friends, Paul, put together an idea. He put out an idea on Facebook, in our Facebook group. Hey, let's do a Zoom meeting. I don't know how many people are going to be on it, but I think there's going to be like 65, 70 of us on this Zoom powwow that we're going to have. It's 8:00 tonight, and I'm just, I'm like useless for the rest of the day. I'm so excited to be on this call. So I'm really, really excited about it. So let's do a quick screen share, and then we're going to do some shout outs to everybody out there. There's really, there's not a whole hell of a lot to say, except how bad how bad things are in the economy. Okay, there's really not too much else to say. That's what today was all about. It's just a very gloomy day in terms of economic statistics. So where was that screen share? Right here. Share screen. Make sure you can see what I'm seeing. Screen one. Let me get back to share screen. Oh, I see how it is. I can't help but share this part. Okay, so share screen. Okay, I'm going to show you. Right now, I'm showing myself, which is why you're seeing that weird screen like that. Okay, but here we go. All right, you see this? Retail sales plummet. You see this? This says it all. I mean, this is in the gray area. I don't know if you could see it on your small screen there, but this is the Great Recession, and this is today. Holy cow. That is like an OMFG moment right there. Okay. And then we go to economic impact payments. So if you want to, okay. So that's another thing today. People today, for the first time, are receiving a lot of people are receiving stimulus checks. So if you are receiving one, you could go to this website, get my payment. You could see, I guess, a breakdown of what you're going to get. Make sure you are getting it to the right place. And for SSI beneficiaries, payments will arrive no later than early May. That's a big topic for a lot of people. I don't know if it affects everybody in this screen share, but nonetheless, that's where we are. So let me stop the screen share. Okay, so just want to go through a couple of quick shout outs here and see who's out there. Hey, Frank, great to see you. Thank you so much for being out here. Matt Merson is in the house. Mike, love you, man. We've got a few people out there. Got a few people who gave me a thumbs up. Chris, good to see you. Judy, where are you, Judy? You're not home. You must be getting food for your mom. Stacy Billing. Stacy, happy birthday. Stacy, I feel like this whole week, like the last week, has been your birthday celebration. So I hope you're having a great time and love the Facebook pics and good for you. Happy birthday. So let's see who's out there at the moment. We've got a couple of comments in LinkedIn land. Hey, Paul Greco, I haven't seen you for a while, man. Good to see you. Hey, Ivana, good to see you. Matt, you're watching me on LinkedIn also? You're just unbelievable. And Thies Loose. Listen, Thies, if I pronounce your name wrong incorrectly, please let me know. So Paul asked me this. Okay. Unemployment numbers, housing, fiscal quarters shouldn't come into play in this corona environment because they're not real numbers. There's no recession. It's simple. It's all due to social distancing. Once things open up again, I believe things will surge slowly in certain sectors. Bottom line, there's going to be a lot of opportunities, but the ideas and plans start now. Good job, Mitch. Paul, I happen to agree with you. Okay, this is a health crisis induced recession / depression / plunge. When we lift the social distancing, people go back to work. It'll take some time. Like you said, certain sectors will take time. Certain sectors will be up like that, like immediately. My sector has not even slowed down. I mean, it's busy as can be. So, that you're right. So what sectors could take a while to come back? I think housing will probably take a little while to come back, only because people lost their jobs. And I was speaking to a friend of mine, David Goldklang at Wells Fargo. He's a mortgage banker. And he said, just, the problem is a lot of people, including, higher income earners, have lost their job. And if you're in the middle of going for a refi or a mortgage app and you lose your job, that's it. You're not getting approved for the loan. So there's a lot of that, and people have to make sure they get their jobs back and that sort of thing. I think the automobile market will come back pretty quickly because there's going to be a lot of pent-up demand for that. I have some people in my stable who own automobile dealerships, and I'll have to have them on as a guest. Okay. So, hey, Phil, good to see you. Thank you for joining us. Frank, still no place to enter your bank information on the IRS website. Hey, look, Frank, I'm showing your comment on the screen. Remember we talked about doing that yesterday? So if you go to comments in the upper right-hand corner in StreamYard, you could see where it says comments. You could do it from there. Yes, I see what you mean. And I have to put this up from Mike. The man, the myth, the legend. I need to maybe put that in a frame. Okay. Hey, Bill, good to see you. Okay. So let's take a look at something. I want to talk to you strategically about cheap stocks. All right. And it's just kind of a random thoughts. Cheap stocks. I want to change my background also. I meant to do two different backgrounds. I have another one for the housing market. How's that? That's pretty nice, right? That looks good. I think it looks good. So let's talk about the housing market real quick, and we'll do a few more shout outs, okay? And let's talk about the stock market for a second. I'm looking at this house behind me, so I'm thinking that's going to be a really nice house if it ever gets finished. And we'll see how it goes. See, the problem with the housing market is when people aren't buying houses, there is a stat, something like every time somebody buys a new house, an angel gets his wings, and Home Depot gets like tens of thousands of dollars of sales, and just the multiplier effect from people buying appliances and furniture and carpet and all those things that go with it. But cheap stocks. I made a point in a live stream about a week or two ago about buying stocks under $20 a share. And I'm looking today at J.C. Penney, which is, it's pennies. J.C. Penney is trading for pennies. Go figure. Okay. And, for years, people were talking about that stock as if it was like a cheap stock and maybe a turnaround. And I remember I was at an event at in this networking group I'm in called Long Island Elite, and I was talking to my friend Peter, and he said, "Mitch, what do you think, J.C. Penney?" I'm like, "I think you should go with Costco." I think J.C. Penney was probably under $20 then. I have a problem with stocks that go under 20, okay? Because typically what happens, they go under 20, there's a problem. It seems to me the price at which investors start to acknowledge that there's a problem, and then they go under 10, and then they go under 5. And generally speaking, stocks don't go that low because things are good. Now, I know once in a while you do find a diamond in the rough, like a Snap, for example, was I think down to like $4 or something, and that's worked out. But you didn't have to buy it at the bottom. You could have bought it when it went over 10, when it went over 15. I'm not looking to be to try to find the bottom in these, because more often than not, I find a new bottom after that. I don't want that. It depends on your risk tolerance. So that's my issue, and J.C. Penney just reminds me of that when a stock goes below 10 and below 5, there is a real problem that we're probably not going to figure out, other than to say that there's a real problem. So I want to avoid those. Then let's talk about volatility and risk, because that's a very big topic. People don't know what the difference is between volatility and risk. And I know in Wall Street, in the investment world, people don't even use the word risk. They use the word volatility. Isn't that just a fancy way of saying risk? Okay, so volatility and risk to me are two different things. Okay, volatility are the ups and downs of your investments when your financial goals are very far into the future, because they don't matter. You can afford to wait for the market to recover. You can afford to maybe even invest more money, keep dollar cost averaging in your 401k plan or what have you, and that's fine. That's part of the investment process. But risk is when your financial goals are, coming up pretty quickly, under 5 years, under 3 years. That means when we go into a bear market and we have volatility, the volatility is a risk because you could be forced to liquidate your investments during a bear market, which means you are forced to take lower prices, which is basically another way of saying you're losing money from what you could have had if you had time to wait a long time. So that's the difference between risk and volatility. That's why time horizon is the first and number one factor that goes into determining one's risk tolerance. So the more time you have, the greater your risk tolerance. It's not the only factor. Some people have a long time horizon and they're still not comfortable with risk, and that's okay. All right, so that's the deal for today. The whole day today was just about really bad, statistics, really bad bank earnings, crappy housing market, crappy retail sales, New York State manufacturing index plunged. Some of these numbers are the lowest ever since we've been keeping records of some of these statistics. I think the best part of today was at the Dow and the major averages. By the way, you cannot invest directly into an index. You could invest in a security that mimics a traction index. But I think the best thing of the day was that markets weren't down a lot more. Had we had these numbers, a month ago, we probably would have seen a 2,000 point plus down day on the Dow. So chin up. We knew the numbers were going to be bad. We're getting a glimpse of it now, and it's going to continue that way through the rest of the month. But as long as we expect it and we still have confidence that we'll come out of this, like Paul said in the LinkedIn comments, then we'll be okay. And this whole thing will be for nothing. The March 23rd low, 3.5 weeks ago, is still pretty far lower than where we are now. And I don't think we tested. I'm still on that kick right there. So let me just take one more look out here. Okay. Make sure I'm not missing anybody. Give a few shout outs. Phil, I'm really glad you joined me. Thank you very much. Hey, by the way, Phil, did you get around to coloring Deborah's hair? Because we talked about on Facebook. We talked about that. I colored my wife's hair. If people don't know, and we ordered Madison Reed, and I actually did it, and like it came out really good. My wife was really happy with the job I did. A few more comments out there. Okay. Economy is simply a victim of circumstance. Yes, Paul. And Matt Merson says, yup, nugs. Matt, I love what you're doing with the vegetarian chicken nuggets. Very cool. And let's see if anybody else out there is in Facebook land. We got all of you. Okay. I'm going to end this broadcast. We'll make it a little bit shorter today. I'll be back tomorrow with more notes, more things to talk about, some more personal finance stuff. And Matt, I will see you tonight on Zoom. Take care, guys. Thank you so much for joining me.